Hello, I'm David Jones, and this is another video in conjunction with Trading 212. In the first video, we talked about the importance of trading psychology. If you remember, we're all looking at the same information, whether we're looking at charts, news, economic events like the payrolls coming out, the unemployment numbers, but most traders lose, while some traders are consistently profitable. So we talked about how important psychology is to trading, and in this video I just want to develop that theme a bit more and maybe look at ways we could change our own trading to become a more consistently profitable trader. There are lots of sayings in markets, and one of them is, which I think is a true one. I'm going to write this down to try and hopefully drill it home how important this is. So one saying is, scared money never wins. It's maybe a slight exaggeration, but what it means is, again, going back to the psychology aspects, if you're trading at a level where, let's say the trade goes wrong and it has a massive impact on you because it means maybe you can't afford to pay the mortgage or the rent next month, I think it's very difficult to look at a financial market in a calm and balanced way. And I think we all know, if you've done any reading around trading, how important it is to be a disciplined trader. And I think if you're risking a level of money that means if this trade doesn't work out, it's going to leave you in a bit of a mess financially. You know, it's a lesson that, okay, maybe I need to cut the size of my trade down. Again, this is something that's easily done. If let's take a look at the screen here. So I've got a chart of pound against the dollar. So it's a historical chart over the last few days. And let's say when we were looking at this, pound against the dollar was trading just above the 21.60 mark. So we wanted to be a buyer. So I thought, okay, I'm going to be a buyer at maybe 21.90, 2200. I'm going to have my stop beyond 21.60. So my stop might go in beyond 121.60, I should say. So my stop might be, 50, 60 points away. But it's very easy then to decide on what size trade you're going to do. What does that 50 to 60 points of risk mean? Maybe for you, you're happy risking losing only £50 or $50 on a trade. So you'd need to size that trade correspondingly. If you feel uncomfortable risking £500 on a trade, then don't do it. Trade a little bit smaller. In this day and age with trading platforms like Trading 212, you can set the size of risk to something you're really comfortable with. So I think it's great advice to start small. You shouldn't see trading as a get rich quick approach to markets. You should see it as a series of trades over the long run, making you money. Don't risk losing everything on one single trade. The next thing to think about, we touched about this a little bit when we talked about one of the common problems that people have when it comes to trading, the psychology aspect. And it is, of course, that their losses end up being much bigger than their winners. So if somebody is losing $100 when they're wrong and only making $50 when they're right, their account ends up looking something like this. So again, I think an important part of placing that trade is to weigh up, okay, well, does this trade make sense from a risk versus reward point of view? And it's one of these things that we'll talk about in a bit more detail in the next video. But I think it's important to think, well, okay, is this a risk really worth taking? If my stop loss is 50 points away, is there really 100 to 150 points in this trade? And is it something that's worth doing? But we'll talk a bit more about that in one of the other videos. But for now, I think the theme for this one is going back to that saying, scared money never wins. If every little point move in the market causes you to break out in a sweat as to how much you're winning or losing, then maybe you need to just dial down slightly the amount of risk you're taking on. We'll bring things to an end there. So from me and from Trading 212, if there's any comments or any other topics you'd like to see us cover, just leave us a message in the comments below. And in the next video, we'll explore this idea of trading psychology a bit more.